Greetings, everybody. This is Jeff Scott, and welcome to this week's edition of my top-down review, 11/15/2020. My email address is hgsidoc@gmail.com. Every once in a while, I get comments about being put on my mailing list. I don't have a mailing list. I post these to the HGSI board. I also post them in YouTube. Now, in my experience, if I go to YouTube and subscribe, then I'll get a notification if my alerts are turned on, usually in my phone, that a new video was posted. But if you subscribe to me and you just check it Sunday afternoon, Sunday evening, under your subscribed videos, you should see this. If not, just please subscribe to the HGSI board. I don't have any intention of ever having a mailing list since I have nothing to sell. And I don't like to add extra work for me that I don't normally do. My wife would say this is extra work, except I do this anyway, so I'm just recording my typical review. So, will broadening top lead to upside breakout or fake out? Lots of positive news on the airwaves this week about how this market's going higher. I'm just going to give a contrarian view and why I think it could go either way. Probably the lower resistance is higher, but I think we're extended on the short term, so I wouldn't be surprised to see us have some at least sideways movement middle of the week, if not more pullback. This session is for educational purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. I don't pay. I pay for all the tools that I use. No one pays me to say good things about them or to use their tools. And trading involves risk. You are solely responsible for any decisions you make. When I used to do education, and with COVID, I've certainly stopped. And since George Lee passed away, which was half the reason why I used to travel and do education, I suspect I'm probably going to retire from that business as well. Not that it ever was a business. Business means you get paid and make money doing it. I call my education Be Your Own Guru, and I just highly suggest you do what I did. Learn from smart people, read, go to live seminars, perhaps purchase indicator sets, get good at them and become your own style. Then you can become your own guru. I own a lot of different software. Most of the things I do during the day are in TradeStation or Thinkorswim, where I have John Person indicators, Dr. K's and Sagar's Q indicators. But I also extensively use HGSI and EdgeRater, as you'll see during this video. I'm an unpaid volunteer, and this should be considered what it is, just education from a non-professional. HighGrowthStock.com is the website for HGSI, free 30-day trial. Under investing strategies, you'll see hundreds of videos. Stock patterns are cyclical. It certainly felt, if you were looking at value stocks, which were down here, beaten up after selling off, that we're starting a new rally. If you're a growth stock, big cap guy like me, it felt like we were rolling over. So the question really is, are we going to see two markets, which we have been seeing, frankly? Does the whole market go higher here? Are we breaking out? We're in a seasonally strong period of time. Or is this like what we've seen over and over again, that the big cap sells off and then it takes another leg up, and then the value stocks and small cap stocks will be laggards? We've gone through this cycle multiple times this year. Every time, I remember TG, he's got some great tools and much faster than me. I'm a slow guy. I'm a turtle. I like to get in a position and stay for a while. TG perhaps is more in and out. He'd call me up and say, you got to look at my stuff, TG Watkins. He's got great stuff, his Moxie indicator, and he'd be right. Those airlines, those casinos, those hotels, they're turning up. And he'd get a 3 to 5 day move, and then they come back down. I don't play that game. I'm not fast enough. Like I said, I have a full-time job, and I like to let my positions run. And then I give him a hard time and say, but I know that one of these days he's going to get those signals, and I'm sure he had them last week or the prior week, and they're not going to come back down. I just don't know if this is the time. I'm going to bet big cap tech's got more to run, but I can't guarantee that, and clearly this was not a good week for big cap tech, as you'll see. So I'm living up in uncertainty. I've raised cash. I have less positions, still have plenty of positions. And I've not been taking the Jeffrey synthetic, which is combining a long call with a short put spread, using the short put spread to fund my long call. It's cheap to get in. It hypercharges your percent return if you're right. But if you're wrong, your losses are compounded. So when I'm hesitant, I don't make that trade. I'm doing a lot of verticals. I'm doing calls and have a couple of positions. Here is Friday's market. Nothing makes me more unhappy when a market looks like this and I actually lost or broke even on the day. Big cap tech is the laggard. Everything else is winning. And we'll see if that continues or if it turns around this week. But this was not a great week to be in the big cap tech stocks. Monday wasn't bad, but that was a fake out. Let's take a look at the major market futures. And there's been some important changes in these since I last talked to you a week ago. Start with the S&P futures. We have a year's worth of data here. Simple chart, OBV on the bottom, volume in the middle, 17 in green, 50 in yellow, 200 in red, simple averages. I have those three averages on every chart you'll see. If it's a white background, the yellow is blue. If you see a magenta, sort of a purplish red line, that's an 8-day exponential. So what changed here? We set an all-time intraday high on the S&P on Monday. So let's talk about Monday. Friday ended up strong. Friday was opposite day. Friday opened at the prior day's high, traded down almost to the Thursday open, and then came rip-roaring back a week ago and closed right where it opened, giving this sort of a gravestone-looking doji. Now, I thought perhaps that could be a negative candlestick, or is it positive? It was at least indecision. We gapped open on Friday. Typically, the market goes in the direction of the open, and the market traded up the whole week. During the day Monday, we took out our prior closing high, but we came back down, and it took us until Friday to get back above it. So this was a bullish move. We closed up on the week nicely, closed near the high of the day, got to be considered a bullish close, and you could see we're in a person buy signal. If I look at the NASDAQ futures, different. Here's our prior high, closing high. We traded up to that closing high, and we failed on Monday. Notice a red candle here because we opened here, traded up, and sold off hard. Same candle from the prior Friday, opened up, sold off. Tuesday was a negative day, traded down to the 50-day, and bounced. So we're still in a person sell signal, which will probably convert on Monday if we trade up. Why is the NASDAQ weaker? That's where big cap tech is. The Dow futures. Prior closing high. We're not there, but we did take out the prior high, all-time high, and have a new time high in the Dow futures. And can you believe what that high is? That high of the day is 30,000 on the dot, of which we rapidly reversed. That could have been a negative day. It traded down to here and then came back up here and closed. So sideways move, perhaps a flag forming here, bullish pattern in my mind. Russell futures, big change here. Big change here. Let's look at a quarterly. A monthly. I want to point out that the candle that I'm highlighting here in August of 2018 was being the key word, the prior all-time closing high on the Russell 2000. That day closed at 17.43 and 20 cents. This Friday closed at 17.44 and 40 cents. Folks, we now have an all-time closing high on the Russell 2000. How exciting is that? Took us years to get back here. All-time high was set here. And so the Russell has now joined the party and is now positive on the year. The VIX behaving down near the bottom of its range. It could be lower, which it was prior to the March. So I have to say that supports a bullish theme. And then the dollar is sort of struggling down here, and a weak dollar is good for small stocks. So NASDAQ's the only thing that's at all, quote, weak, and that would be with an asterisk. It's weaker. Everything, S&P, NASDAQ, Dow, and Russell are in a weekly buy, in a daily buy signal. And the VIX is in a daily sell, and the dollar is in a daily sell. Now, if we go back in the PowerPoint, I go to the next slide, I look at a weekly, and you can see we got weekly buys on all the major indexes as well. But we haven't been this strong on the indexes in quite some time. It's just the big cap tech is lagging, and that bothers me. Rates continue higher. I set these white lines a long time ago, and the bottom line to me is sort of the low jump bar. And by that, as long as I'm above that, it tells me the economy is doing well. And the markets like strong economies. The next line up and the line after that are when rates start to go up to the point where they can slow down the economy. So we are well below the first white line, the low jump bar. And that's bad because that says we got a weak economy or economic concern. So rising rates from down here to me are positive. AD lines at or near all-time highs on Russell 2000, at a new high on the 1000. AD lines at an all-time high on the AD line. These are strong breadth signals, folks. We've got the only ones turning down on the week are the Qs, led by big cap tech, and the dark blue, which is TLT because of rising rates. Breadth, look at the move up on stocks above the 200 days, stocks above the 40 days. These are getting near the highs of the last couple of years. You certainly could have more room to go on the stocks above the 40, but I'm starting to get more concerned that we're getting a little bit overbought. 3-month new high, new low, which has been my go-to at reversals. Now, you don't have to have sharp pullbacks. You could get, you see these little things here that occurred up here, just a couple day pullbacks in the index, and then it continues higher. Sometimes you get the deep pullback that we saw last year, and then we saw again earlier this year. I look at this and I see that we're near the top. So that's got to be a little bit of a red light. The daily McClellan, a bullish zero line reject on the oscillator. But if I look at the weeklies where we have new highs in the S&P 500, we're nowhere close on the oscillator or the summation index. Maybe this means that we're just early, we got a ways to go, or is it beginning to see some divergence there? It's enough to keep my eyes on and be a little bit concerned. Buckets. So imagine if you had a tool where you hit a button and it could take all the stocks in your list, in this case the S&P 1500, and tell you on the right how many of these stocks are above 86% versus below the midline of their Bollinger Bands. That's a very bullish number, kind of getting extreme, to be honest. Then I go, let's take the Bollinger Bands between 0 and 100. Let's take 0% beta to 100% B, and let's take 10% slices. I can see here that probably 60% or more of the stocks in the S&P 1500 are within 10% of the top of their Bollinger Band, at the Bollinger Band top, or above it. That's extended and makes me a little nervous. I look at the Hindenburgs. Now that we're getting to all-time highs, these will come into play again. We don't have one. And I just wanted to call out on the big roll-up on Monday, we had got to 15% of the stocks in the NYSE at all-time high, had hit new highs, and 12.5 on the NASDAQ. That was a very bullish day. So bullish we had a reversal. Market tone, decidedly bullish, no shocker. Now, this is the part that makes growth stock investors nervous. We've gone through, as I mentioned, with T.G. Watkins indicators and stuff, these rapid rotations. They haven't persisted. One day they will. Could be this time, might not be. And when that happens, growth falls out of favor and we see junk off the bottom. So let's take a look at this EdgeRater warehouse report. The first thing I want to show you is that it's very easy in HGSI to save a copy of the database. This is dated November 8th, so it's a week ago, and it's an HTML file, and I'll show you how to do that when we go into HGSI, that I back up the entire database. And this tells me what the top stocks were, but it's all the stocks in the database are listed here, along with their fundamentals and technical values on that day. That creates a historic archive for me. Now with that historic archive, I can now come into EdgeRater and run the warehouse report. So using the data from November 8th, today's the 15th, November 8th was Monday. Actually, the data was pulled on Saturday, so it would have been the 6th. And then looking at what happened over the next week. Here is percent gain. Here is ERG. Higher percent gain to the top, more ERG to the right. ERG is a combination of EPS rank plus relative strength rank and group rank. I ignore the first 3 points because there's very few stocks. You can see less than 20 stocks. So if I just take the 4th point and 5th point down to here, you see a big decrease. What does that mean? It means that low ERG stocks had gains of over 20%, and high ERG stocks had losses over 5%. There's a 20 to 30% delta. So the junk had an amazing week. The prior leaders, not so much. If you had high EPS rank, you had horrible returns. So more to the right, the better rank, higher returns. So the best returns were in low EPS rank. Best returns are in low relative strength. Best returns in bad groups. Best returns in distributing stocks. So you had a junk off the bottom rotation. S&P 500 was up 2.16. The IBD 50 was down 5.51. My holdings were down 5.22 on the week. Now, that would be raw stocks. That doesn't include hedging and position size, etc. But I still didn't have a great week. You look at Market Smith 250 down over 3%, almost 4%. IBD 85, the weekend review, down 4%. My buy watch, which were the best looking setups, was down 7%. That makes me feel bad, except you look at the Morpheus high relative strength EPS rank groups were down 8. Leaders raw relative strength, raw group, raw combo down 7.86. Stocks at a 52-week high were down 7.54. Best criteria were down 7.13. Best of Woodward and Brown were down 7.06. Our kinds of stocks got trashed this week. What worked? Short-term supply, negative earnings growth. These are stocks I usually look to for shorts. 25 winners, no losers, up 20%. Stocks and groups moving to the downside. 97% winners, down almost 18%, up almost 18%. Smaller stocks and groups to the downside. 94% winners, up 17%. This was a junk off the bottom week. We'll see if that persists or if we revert to the mean with big cap tech. Sectors were strong overall. Now let's go into Q real time, and let me show you what I'm doing during the day. So first thing is, this is on all day, every day during the markets. And I'm watching sectors, and this is the same because the market's closed. On Monday, this will be Mondays, and this will still be Fridays. Every sector was up on Friday. Every sector was up on the week, on 2 weeks, and on a month. This has been a strong market, despite October feeling weak. If on Monday, on Friday, every industry group was up. Over the last 10 days, every industry group was up. On Friday, 92% of the stocks in the market were up, which has been a pretty high number over 2 days because we had some weakness on Thursday. You can see more red on there. How much would this help you, these gauges, if you saw you were up 3% and everything was red? That happens a lot when the big cap growth are in charge because the rest of the market is selling off. It tells you to be careful. So these are invaluable to me. And if I look here out on this chart, you can see over 5, 10 days and a month, all the sectors are positive. Now, you might notice that the sector number percents are different than what you see in HGSI or other places. The reason is simple. These are based upon the S&P 1500, and most of the others are based on the S&P 500. Now, if I go into the next tab, I could see the various sectors, and let's make sure we update it to today's, and let's make this bigger so it's not microscopic for you. Now it says November 15th. All right, this is one-day performance. Let's see, what was the leader on Friday? Energy. Now, do you really want to be buying energy here? I bet there's some good value plays there. I'm not all into energy, but interestingly, over the last month, energy has been the second best, performer. So maybe we should be looking at energy. Real estate, really, they've been getting clobbered. Materials had been okay, sold off, and are now picking up again. And then you get communication services and discretionary. Financials had a blip of strength, and now they're selling off. Staples, healthcare, utilities are weak. So let's say I have interest in energy, real estate, and materials, the top three. I highlight them, I'm going to hit the heart there. Now I'm going to hit the gears. And what's going to happen is the industry groups that are in those three sectors are now populating on my screen. Materials, energies, and real estate. Now let's do the same thing. Let's rank these. Largest to smallest, not that way. And let's see where the strength was this week, at least on Friday. Hotel resorts, aluminum, oil, gas refining, steel. Now, a couple of things that pop up to me. Look, retail REITs were strong too. Office REITs. Who wants those things? No, it's crazy. Junk off the bottom. Hotel and resort REITs have been strong for 4 months. Aluminum has been strong for 4 months. Oil, gas drilling has turned around, as has refining. So let's take a look. Let's go down to 136. And let's look at each of these, highlight them, give them a little love. And now I'm going to hit the peers. And when it's going to open up here, these are the stocks in the S&P 1500 that are in the industry groups that I just identified. Now, here's the magic button. Those 3 stars will identify stocks that are undervalued that have earnings. I got 4 of them came up. Interestingly, 3 of them are in office REITs, and 1 of them is in oil and gas exploration. Now, all of them are undervalued. The higher the number, the lower the valuation. BDN, I don't even know what BDN is. Look at year over year quarter, this quarter's earnings per share growth. So it stubbed its toes with COVID, but it's had great earnings this quarter. It's got revenue growth 1 year, last 2 quarters, although it stubbed itself here. All of them have. It's got a big yield at 7%. Next earnings dates are not to February. Earnings quality is not very good. Look at performance over the last 5 days, up 24%. Yet it's still 33% below its 52-week high. Let's say we're interested in BDN.N. Now, just out of curiosity, its stock chart, for all I know, is going to look horrible, but bear with me. I assume it's BDN. So we're breaking out here off of a downtrend, new weekly buy signal, on great volume on Thursday and Friday, recent weekly cycle low. It just took out its downtrend line. This looks very interesting, and it's undervalued. So we may come back to this. Now, what I do is I take this, so I copy the symbol. I can hit the gears here, for example, and it's going to show me its industry group, if I did that correctly. So we could see its industry group as office REITs and how they really have been strong over the last month and getting stronger. All right, let's go into the Vital tool. Now, the Vital looks at a much larger database, not just the S&P 1500. Let's paste BDN.N, right? BDN.N. So, Brandywine Realty Trust. So it's going to give me a little bit of the fundamentals, 800,000 a day. That's good. Next earnings, February 21st. Now it's going to build out a list of peers that are in its industry or related industries. So these are a lot bigger list of similar stocks, and these would be in a much larger database. We can see of these stocks, 96% of them were up on Friday. Interesting. You can see we got revenue growth here, very undervalued stock. We've got earnings stub there, but big earnings growth on the current quarter. So now let's look at the fundamentals on the peers. And I know you can barely see that, either can I. And let's just hit the magic 3 and see if anything else pops up in this group. So these pop up as other office groups, office REITs. And so I can go over here because I got to find the trade station symbols so I can copy and paste, which are right here. Copy. Well, I only need the 4 because I already got the first one. So we're going to look at these later. Hopefully I'll remember. So that's marrying a fundamental analysis, and I'm going to go look at the charts to see if I can find anything interesting. I find that tool to be incredibly useful. I can do exactly what I did real time. I don't have to wait to end of day. So I get a lot of people calling me up and say, but Jeff, I thought you love HGSI. I still do. Let me tell you about the Q tools. I love them. They are great, but they're a problem. I don't mind buying other data sources. I know a lot of people can't afford it. You have to buy a real-time Refinitiv Thomson Reuters subscription to do what I just did during the market. You can have an end of day, but then you can't do it during the market. There is no charting platform or data platform within Q itself, so you have to purchase that Metastock platform. So before you buy the Q tools, you have to buy the Metastock, and your all-in cost will be 3 times what you pay for HGSI. I love them both. I can afford the extra data service, so I have them both. And I recommend you do that too, but I also recognize it's a lot of money. Canaries in the coal mine, sideways. Bad week, but they're at free parking, and what happens from free parking? It's when things usually take off. And notice it's got the moving averages are all below them. Know your news and earnings. It's a lighter news week. We still got some jobless claims as always on Thursday, but it's a lighter news week. Lots of earnings still. I have a position in NEO. It got trashed on Friday. I took half off. I actually put some put coverage on it, and I'll either take it off before earnings. If not, I'll leave my puts there. I either take the position off the stock and my puts before earnings, or since I'm protected at $45 with my puts, I may just leave it on. NVIDIA, boy, they got trashed on Friday. That could be a big mover Wednesday after close. Then you got some software stocks with Workaday here and others on Thursday. So know your earnings. It's a judgment call to hold over earnings or not. It's bad judgment to not know when your stock's earnings date is scheduled. So money flowed into economically sensitive stocks with the vaccine news. Dow was up 4, S&P 2, NASDAQ 6, Russell 6, NASDAQ was down with the relative weakness in the mega cap growth stay-at-home stocks. Despite that, coronavirus cases and hospitalizations are soaring, and the debate on mask closings, government response continues. And let me tell you, the debate on vaccines hasn't even started. How long is it going to take? What's the lottery going to look like? Who's going to get it first? I think the stay-at-home stocks are fine for now. I think they're going to recover, is my opinion. Eventually, you're going to see the rest of the market take over, but I don't think we're done with this. Fierce market result in the Russell and Dow joined the S&P and NASDAQ in positive territory for the year. I'm still long like big cap tech, but I took heat. Seasonal strong time of year, but continued overhang in the election and pending Senate votes in Georgia may keep a lid as we are at the top of a broadening top formation. Now we'll see if we break out or do we pull back. What's a broadening top? Take a look at the S&P 500 over the last several years. You've got some higher highs, but we've also recently had some lower lows. That's a broadening top, sometimes called the megaphone. And we had a false breakout of that, came back in below the top line, and we'll see what happens. So now let's go on and take a look at the charts. Quickly in my trade station, let's look at my futures again. 6 things I look at. Are we in a buy or a sell? We're in a person buy daily, weekly, and monthly. Second thing, are we green, which is okay to be long or hold? Are we blue, which is neutral? Are we red, which you should be short or holding? We're green, we're green, we're green. Third thing, where are we at in the outer envelope? To be truthful, on both this and the red dots, which suggest MACD divergence is occurring, we can go on for quite some time on the daily before we reverse. But both those things we're at the high end of the envelope, and we got the red dots on daily and weekly. Why does we have red dots? That must mean that this peak here is probably higher than the peak here. It just tells me that we've got less and less participation, less and less pressure keeping this up, and a higher likelihood we're going to come down. But it can be a while. We do not have a sell sign in Laguerre, but if you look at the high jump bar on Friday, we are at 83%. So we're definitely getting up there. When we get up here to 100%, the market almost always sells off. We could be there in a day or two. I'll be closely watching that. The weekly bongo in the middle here is also green, which is good. That's the E-minis. If I look at the Dow futures, doesn't have the MACD divergence, otherwise looks the same, except the Dow is at 88.7. If I look at the Russell, it's got the dots at the upper envelope. It's at, look at that high jump, folks. It's at 99.38 on the high jump. That's a warning signal. Clearly a warning signal. Doesn't mean it can't go higher. But typically when we get up here, after a day or two, we get a pullback. We get up here, after a day or two, we get a pullback. Well, we're get up here, after a day or two, we get a pullback. Well, we're up here. So that's a little bit bothersome. And then if I look at the NASDAQ, off the envelope, has the red dots, nowhere close on the high jump. So I think certainly on the Russell, more evidence that we're getting extended. Let's go into HGSI and let's start by doing designer. Let's look at the market analysis user groups. Major Markets Plus, Warehouse View. "28 things in my group." I like looking at it with a top-down view. And it's ranked by raw combo. Composite, small caps, transports, mid caps, Dow, Russell led. Interesting, the IBD breakout candidates did okay. What lagged was volatility, the dollar, IBD 50, FANGs, miners. NASDAQ 100, gold, S&P 100. You look at the one-day performance, FANG was up a little bit, as was the IBD 50 ETF. But over the 5-day performance, they were major laggards. Let's take a look at some of these in the charts. Now, I know that it's impossible for you to read these things. This is the problem with the 4K screen. I'm letting you guys vote. Look at last week's video, which is probably less sharp because it's a lower resolution. And look at this week's video, and I am happy to use either computer when I'm at home for my videos. It's sharp enough for me, but I gotta imagine it's pretty teeny weeny for you. Okay, here's the S&P 500. Do I see anything instrument that I have to show you here? Prior high. We're sitting right at prior high. So on the cash market, the high here was, the close was at 35.80.84. The close is at 35.85.15. New closing high on the S&P 500. This was the March peak. We've had a great year. We're positive on the S&P 500 at new closing highs. It's hard to be bearish at all-time highs, except eventually you get to the point where you get a pullback. You could see Monday's big rise at the high jump bar. That's the S&P, the Dow Jones Industrial Average. We are now at the March highs. Wow, how exciting is that? The closing high close was at 29,479.80. Got a little bit to go to take out the prior highs. But isn't that nice that we're almost there on the closing highs? Russell, look at this move up here. And I'm not even going from the very bottom. But if you take this cycle low here to where we closed here, we're up 22% in 36 periods. Wow. Strong as can be. And if I look at the NASDAQ, again, it's hard to be really bearish looking at that. It's the weakest of the bunch. It had a negative week, closed just below the prior week's highs after gapping up. We'll see. I'm hoping that the markets continue higher. I just think we're getting closer and closer to at least a short-term top. All right, let's take a look at some of the other interesting things. IBD 50 ETF. Looks a lot like my portfolio did. Major run up on Monday rather, and then closed off Monday's lows, but a little bit, sideways on the week. Yeah, red candle high at the high jump with the sell-off. Perhaps you could say, take a bullish tone and say at least it didn't sell off further. It kept its stuff right at the moving averages, which acted as support. I don't know the difference in makeup in the breakout opportunities, but the breakout opportunities ETF did the same thing, but actually ended up the week stronger. That's interesting. And the FANG stocks I showed you were sitting close to the 50. Here's an ETF sitting right above their 50. Again, not broken, down, but not out. You could certainly argue it's forming a wedge, and it may resolve going higher. If we look at biotech has been strong. Nice move off of its bottoms. Certainly looks better than the growth stocks. And semis haven't looked bad either. So it's really the big cap tech that's really been hurting, as you can see here. When we talk about big cap tech, let's just quickly look at them. Google looks great, right off all-time highs. High jump was triggered earlier with some red candle highs. It's extended, but it's good to be holding that one. Here is Apple sitting right above its 50s. I'm neither bullish nor bearish here. Microsoft, similar, holding above its 50s, going sideways, pausing, which is okay. Tesla has pulled back below its 50s. Knowing Tesla, it's going to bounce up again, but it's right now below its 50s. You could buy any of these here, but I don't feel that compelled. Adobe, which we included, has sold off below its 50s. There's the index. Amazon, like Tesla, doesn't look that bad, but it's sitting below its 50. What's the impotence to go buy these? Facebook sitting on it above its 50 here. It's just not showing you a setup that says you need to go buy it now. And here is Netflix, probably the weakest of the bunch. NVIDIA, this one's the most interesting because it's got earnings this week. Not bad earnings per share growth, but it's got a super high multiple. These are the big cap techs. Alibaba, destroyed. So there's a lot of things working. They're just not this category of stocks anymore. Let's go back here. Let's look at the dollar. Sort of bouncing around its bottom. Let's look at the volatility. Also near the bottom. Let's look at gold. Not doing much even with the weak dollar. You look at the weekly, it looked like last week was pretty good. Then the week we just finished, not so good. I still think gold goes higher. I think we're going to be in a weak dollar environment. But wait till it moves. Don't predict it and then be chopped up. Miners chopping up, and silver not doing much either. Looks a lot like gold. So I haven't shown you anything great yet, have I? Except a market that looks stronger than some of these individual components. Here's strength. Industry groups, we got 175. Two-day force, 87. Two-day force down, 4. That's a pretty strong winners to losers on the groups. Commercial vehicles are down. Workhorse, it had its day, sold off hard. See, this is the candle that got me out. Big topping tail, and then it dropped. Maybe it runs up again. It's certainly in a hot group in the electric vehicles. Look at the demand. So maybe it's happening, or maybe that's just more people selling. Medical equipment. I don't know much about this group. Electric power equipment, sporting goods. Let's look at 5-day down. We have only 6 groups, so longer term downtrends or underperformance, and 5-day up, 86. So this market's strong. It's really strong. You look at price change over 5 days, 2-day up ranked 24%, 22%, 17%, 14, 13. How do people lose money this week? It's simple. You have to be in auto parts, cruise lines, exploration, oils, refiners, airlines, entertainment, aircraft, oil, gas surges. Those are not growth groups typically, yet they led this week. Let's look at some auto parts. One of them makes the top above the index. That's usually as far as I want to go. Yeah, you had a big gap up here on Chalk Energy, CBAT. It is a lithium battery story. It's a cheap stock. Even with this big move, it's in the $6. It doesn't have any earnings. It does have some revenue judged in the millions. Its market cap is $400 million, which is about 20 times revenue. Trades a ton. I got to believe it's a Robinhood stock. But you could say, look at all these kahunas, big move up, Bible gap up. Just not my kind of a stock. Cruise lines. Only one is above the average. This is a smaller one, Lindblad Explorations. Move up a flag. Does it break up on that flag? Let's go down the list a little bit here, even though I don't like going below the index usually. Royal Caribbean broke above its moving averages. Little flag here. Look, I would have absolutely no trouble if someone really believes in these to say, there's your line. You break out above that line, I have absolutely no trouble going long a cruise line. I think it's too early. I think they're coming back down every other time. The TG didn't call me this time, but he's been right. He gets these beautiful little runs, but that's not how I trade. Is it different this time? It could be. I don't know. You're getting it at a deep discount. Carnival failed at the 200. Less interested there. Norwegian looks like Royal Caribbean. Again, you got your line here. Break above that. I wouldn't be against owning some. Just you got to know what you're doing. You're buying junk, hoping that you got a recovery. If you look at energy stocks, Bonanza, sideways move, broke out. Great earnings per share growth in the coming quarter. Earnings are due not to February. Its revenue went from 85 down to 36, then 58. As the markets recover, it's a choppy stock. I don't know how to buy that. I know how to buy it. PDC Energy. Well, this one is more interesting to me. Why? It broke above its 200, flagged 2 days, and now it's breaking out again. Its weekly bongo has turned green. I got a weekly and a daily person buy signal. If I had to buy an energy stock, then I look up here. It's got earnings per share growth. I actually don't mind PDCE. I think it's already on my list, but let me add this to my buy watch list. Again, not my favorite. I like to buy high to go higher, but that's not what you're going to get in these value plays. Diamondback is another similar pattern. It's still below the 200. Magnolia. My guess is that if they move, they're all going to move together. I guess the one I liked the best was the second one, PDC Energy. Thought I found, and then you look at something like ConocoPhillips, pays a 4.8% dividend. Earnings per share growth looks horrible. It's cut in half or more on its revenue. Is this thing going out of business? No. Are you buying it cheap? Probably. Will you be happy in 5 to 10 years that you bought it? I don't know, but it pays a nice dividend. I could understand why somebody would want to buy that. Just not what I usually do. Integrated oils, BP, 9.9% dividend. 9.9% dividend on BP. Total, 6.4% dividend. Shell, 7.8. You can't make, let's go back up to BP. Is it going out of business? Highly unlikely. It's down from the high 40s, right off the bottom at 19. It pays a 9.9%. Look, I get it. I understand why people are buying it. Eventually, these things are going to go up. I just don't know when. Refiners. Move up, flag, and move up again. Looks pretty good on the weekly. This is Valero. They also have gas stations, 7.5% dividend. Delk, 8.9. PBF, 9.2. 9% for CVR. Of course, the one that's got a chart that's broken out the most has no dividend. 6.3 in Holly Frontier. Again, these are not going anywhere. Maybe it's worth taking in a couple of energy plays for the big dividends and hoping that you're buying them cheap. They just could go cheaper. Airlines, again, do you believe it's over? I don't, but I started nibbling. Why? Because this is what I want to see, a substantial break out above the 200. a flag and a breakout. This is Copa, South American Airlines, 2% dividend. Hawaiian Holdings, maybe, not yet. It had a big move here, pulled back, hasn't really taken out the flag. Look at the earnings per share growth. Hard to be excited. Alaska, Delta, they all got the same pattern. JetBlue, yeah, maybe it's time to start nibbling here. They're currently under demand. So I could see, and maybe I will, I'll pinch my nose and maybe I will buy a cheap cruise line and a cheap exploration and a cheap refiner and a cheap airline. Eventually they're going higher. I just don't, they're not growth, and that's what I usually buy. Entertainment, movie theaters. Are you going to a movie theater? I mean, thank God I got a great movie theater in my house. No COVID, it's my wife and I. We just watched The Queen's Gambit. Man, there's so many great miniseries and things on satellite and cable and on the streaming. Are these ever going to recover? I don't know. They're under huge demand, pay a big dividend yield, but gee whiz, golly, we have more and more COVID. How are people going to movie theaters? Again, are you buying a $40 stock for $14 and maybe your downside risk is 10 and you go back up to 40 eventually? Are you going to concerts with Live Nations? Again, someday this will be a great stock again. I don't know when. Are you going to the amusement parks? Look at the earnings per share death. Somehow it's going to pay a 5% dividend when it's losing money. You got to be taking debt to do that. Now, interesting. Look at how these dropped from 249 million a quarter to 6 million. Popped up a lot in the September quarter. Maybe these things have turned and it's time to buy them. Aircraft and parts, the 737 MAX is going to get certified. I'd rather buy Spirit here. Broke above the 200, little flag, and going again. They make the frames. Rather than buying Boeing, it's a cheaper stock. So do you want to buy some Spirit Aerosystems? You know, you got a really good base here. It's the first move off the base. Maybe we should be buying Spirit Aerosystems. Not my usual stops. Hexcel, another aerospace breaking out. They all have the similar patterns. Airlines, casinos. Here's Boeing. Same exact pattern. You can risk 182 on Boeing, or you can buy Spirit and risk 20 bucks. Similar patterns. I think Spirit looks interesting here. Oil gas services. I've had Halliburton since it got into the single digits. I'm going to hold that one probably for a long time. Schlumberger. And you know what? I probably was just doing this the wrong way. Tell me I didn't do that the whole time. All right, I'll tell you what I'm talking about in a second. Schlumberger. Let's look at Halliburton. You know, it's above its 200. I did bottom fish back here. You know, it's in a clear downtrend. Has it broken its downtrend? Not yet. But Halliburton, Schlumberger, you know they're not going out of business. The lithium companies have been on fire because of Tesla. This one has pulled back. Got to be careful of these. Look at the volume on these days. 27 million. On the top, it was 17 million. Back here, before anybody knew what it was, $405,000. Robinhood and crazy volume stocks. This is a very typical pattern. I don't mind looking at it here. It's pulled back, starting to go sideways. It had a Kahuna mobile breakout from a squeeze. It's under demand. You know, maybe it's a better time to be buying it here. Now, I screwed up and I had the didn't have the raw combos being ranked. So let me just go look at the tops here and see if there's anything I missed that I might want to go back and look at. So let's go. We got raw combo. Go up to the top. So auto parts. Yeah, it's the same one I looked at. So those were the big movers percentage-wise. couple other things to look at that I missed the way I was going down the list. 2-day force up, biotech, 5 prime. I took a position here on the Bible Gap Up Day, and let me tell you why. That's why. $800 million market cap's a lot of money. They just had a positive trial on a cancer drug that looks very interesting. Let's look at Immunomedics is gone. Who else is being bought? Typically, these stocks, when they get a drug approved, they go to 2 to 4 billion, and then they get bought for 8 billion. Look at Immunomedics; it just did that. So they've had some interesting news. I'm not recommending you chase it, but this is one I put on your list. And if we get a biotech thrashing day, this might be one to buy and put away. Now, let me be extremely clear. It is a speculative potential play on a new drug developed. It's not a growth stock that is a cha-cha-cha, rah-rah-rah. It's my belief that this is a company that could go a lot higher based upon its data. Urovant is a takeout. Moderna. Remember that $800 million? Look at the market cap of Moderna. $35 billion. What did Trump say about the Pfizer vaccine? It should be free. I don't know if this is crazy valuation, but you got a cup, a handle, and a breakout. Had a Bible Gap Up on Thursday, closed the week near its highs. They're going to have data out this week, so that's the reason to be careful there. Novavax, another vaccine play. I'd rather buy it above the 50, but give it a day, it may break above the 50 on Monday. Vertex, too far down. There's the index. I have non-disclosures with a number of these companies, so I can't buy them because I get exposed to inside information through my job. So I buy this one, and I'm in LABU. 5 prime I don't do work with, so I bought that as an individual. LABU has been how I played it, and I bet my neighbor has stayed long this entire way up. I've been long a while. LABU looks really good here. I also liked Myovant. It had a gap. It would have been a Bible Gap Up. Maybe it's because it was below its 200 when it's, or I'm not sure why it didn't count as a Bible Gap Up. I'd have to go look. But look at this. It was going sideways with improving relative strength, a number of pocket pivots, a bunch of kahunas, and a broke out. I like this one as well. Don't know anything about them. I don't work with them. E-commerce discretionary. Pindaloo is another leader. Breakout. I own this one. I bought it a week ago. It was just luck. No, it was maybe two. I bought it, I think, on this candle. 1, 2, 3, 4, 5, 6, 7, 8. A week and a half ago, and had a great earnings. I probably should take profits on this. It's had a big run. Too late to be buying. JD's got earnings Monday. I think this is a great looking stock. We'll see if it continues to go higher. Mobile breakout from a squeeze and a kahuna on Monday. So it's almost retaken from the NASDAQ sell-off. Chinese play, so always where I looked at Amazon before. Fetch had a big run on earnings, gapped up, closed down on the day, still higher on the day. Fetch has been a good play as well. eBay, you can buy eBay. It's a value play. It's off the 200. I don't know. So I must have been looking at, I was looking at 5-day return. So I looked at the junk off the bottom. That was actually smart to look at that. It wasn't my intent. This is automobiles. So here's a new electric vehicle company called Solo, what I hadn't heard before. It does not make money. Huge demand, big move up. I mean, again, I get really nervous on these stocks that used to trade back here, traded 300,000 shares a day, 200,000 shares a day. Then somebody finds it, now it's trading 39 million a day, 171 million a day. $10 says it runs up and it comes back and it goes sideways. We looked at some REITs earlier. Specialty Pharma is on the force, 2-day forces up there. Vaxart had a good day Thursday, not a good day on Friday, sitting on value on the 200-day moving average. I don't know. I actually own some, but I'm not sure if it's the right thing to be owning. Acres is Global Blood Therapeutics, good story, has a treatment for sickle cell anemia, and it missed its numbers. It got hammered. That'd be buying it at value, I guess. It fell down and has moved up. REITs, we're going to go look at these in a second. Just talk about these real quickly. Do you want to buy shopping center REITs, department store REITs, mall REITs? Hard for me to believe that these are ready to come back, but someday they will. And they all popped on the vaccine news. 9% dividend if they pay it on Simon Properties. Host Marriott, hotel REITs, popped, pulled back, and broke out again on Friday, 3.4%. Look, maybe it's time to buy an airline, an oil, a refiner, maybe a REIT or two that's beat up, and put them away and don't look at them. Ashford Hospitality Trust. Taubman, more malls, 3.4% dividend. American Tower, they make the cell phone towers. I like this one. Not necessarily a good, great buy point. Veritas, senior living, other healthcare use. Not a bad looking chart. Nice uptrend, pull back, and breakout. Hold on one second. This is going long. All right, I'm back. So breaking out pays a 5% dividend. I like this looking chart. I think I already have it on my list, but I'm going to add it to my buy watch. Boston Properties, what do they do? Look over here, it tells you they have Class A office properties. I haven't been in my office. I must have 25,000 square feet in West Palm, and I haven't been in it in March, and we're paying for it. As soon as our lease is up, you think I'm going to have a 25,000 square foot office? No. Zoom works fine for my business. Why would I want to be by offices? Well, somebody's nibbling, 4% dividend. So you're buying junk. This one is the most interesting of the bunch. Vici, V-I-C-I. Dan Fitzpatrick liked it as well. Uptrend, sideways move, looks like it wants to break out here, pays a 4.7% dividend. I like to know who the tenants are. They got great tenants. They got MGM. They got some Las Vegas Sand properties. They own casino real estate. They rent them to the casinos. Casinos are paying their bills. I like Vici. This is probably one of the REITs that I'd be interested in. All right. I'm getting tired. You're probably getting tired of listening. Renewable energy equipment. I shouldn't have gone down the laggards, but it was probably good. Plug Power, I'm in this. It's getting extended. Red candle high. I'll probably take profits. Hopefully I'll get out before it drops too much. Fuel cell energy, don't know anything about it. Renesola, here's a cheap solar stock breaking out. Bible gap up. This could be interesting as a cheap stock. Sunrun, this is what happens to a cheap solar stock when it gets a good run. It's no longer cheap. It's pulled back. Is it getting ready to run? It's got earnings per shares coming in. They should be winners in the Biden-Kamala Harris regime. We looked at cruise, looked at X-ray, looked at airlines. So I think what I did is I started here and I started looking at the ones that moved the most this week as I went down the list, which actually wasn't a bad thing to do because I think we covered a lot of the junk off the bottoms. Now, I do have a buy watch list. I caution you. First of all, my buy watch last week did horrible, but so did the IBD 50. But it's a different type of a list. There were a lot of REITs. Okay, we're going to finish by going and looking at those last slides from Q and real estate owners. So some of these, and I'm going to show you how I group them in a second. So I don't have a lot of industry groups here. Utilities, telecom, steel, talk about a turnaround. Look at something like Steel Dynamics. Pull back in a breakout, mobile breakout from a squeeze, person buy, pocket pivot, kahuna. That looks great, doesn't it? Doesn't make much money, pays a 2.9% dividend. I like it. All right, so steel made my list. Specialty pharma, there were a couple of plays. ITSE, looked interesting, sitting here on the 50, mobile breakout from a squeeze, person buy, kahuna, new weekly bongo. So there's a story to these. These are the ones, actually there's more. Oh my God, I'm embarrassed. Uh-oh. Oh, they went on the other screen. Let me bring them back. Here we go. Come on. I have a lot of stocks here. Here's your Spirit. Here's your Delta. The biotechs I like. Century Aluminum looked interesting here. Aluminum was a top-rated group on the Q. So there's a lot of things here. A lot of them are not my typical things to buy from entertainment content. It must be the story about what I'm watching on TV, but Discovery and others look interesting buy points. Weekly bongo, mobile breakout, take out of the 200, in a person buy with a pocket pivot and a kahuna. So I take these stocks and I break them into various groups. And I just want to look at my special situations. So I'm getting older. I'm thinking about income a little bit. And I'm wondering, should I take advantage of some crazy interests, crazy things right now? So let's just look at these real quick. Here's a master limited partnership in oil. I'd have to understand, make sure it doesn't go to zero over time. Pays an 18.9% dividend. Here is a internet media retail, QRTEA. Do they own Home Shopping Network or something? All right. Not a bad looking chart. It's breaking out down here and it pays a 16.6% dividend. What's wrong with that? American Capital, these are a mortgage finance, 11% dividend, breaking out from a base. Annaly Capital, sideways move, 12% dividend. Apollo Commercial Real Estate, again, I worry about these REITs. Broke above the 200, I can set my stop pretty tight, pays a 15.2% dividend. PennyMac Mortgage Investment Trust, 9.2% dividend. Notice all these are sideways or slightly trending up with a positive move on Friday. Granite Point Mortgage Trust, 7.5% dividend. Sabra REIT, another healthcare REIT, broke out, pullback, going again, 9.1% dividend. Tangier Factory Outlets, in the toilet, gap up on the weekly, looks good here, 8.2% dividend. Vornado Realty Trust, I believe these are office buildings in New York City. Ran up to the 200 and failed. I'd wait till it cleared the 200, 11.2% dividend. And then what I like to buy in weakness when it starts to move up, and I'll be buying a bunch of AT&T, I think. Not because it's a growth stock, but because it gets down to the low 30s, the 20s, and it is down now at 29. It's right off its bottom. It pays a 7.2% dividend. Does anybody believe that AT&T is going away? And oh, by the way, it gapped up with a high close doji. So I've shown you a lot of stuff. I've shown you that big cap tech got hammered. I showed you that junk off the bottom. There's a bunch of big dividend plays that might be a good time to start thinking about. I've shown you a lot of things that are interesting. Now the question is, what should you be, what is the market going to do? And let see if I can do this right. Let me go into this. Let me go duplicate it. Now let's go into edit, view, and I want all the data. Hit OK. So the question is, and this is going back to 20, I want more data than that. So now let's make it weekly. And here's the question. Are we higher highs and lower lows. You can draw it there. You could draw it from back here. However you want to draw it. We got higher highs. We got lower lows. Okay. Are we going to break out and go on to new highs? I think there's a good chance we could do that. Or are we going to come down and retest some of these lines in here? I think that's the question. On a short-term basis, oh, I hate when I do that. Let's try that again. We're getting to a point that we're either going to break up or fall, or we're going to come out of this. I think it's an interesting time in the market. I'm bullish, but I'm not sure that junk that we saw last week are ready to go up and continue. On that note, I'm going to say goodbye. Have a great week. Sorry this was so long.